Bryce, how you doing?
Wow, look at this background.
Brethren, I'm doing great. How are you all?
We're great. I mean, things are
Was
good. The
was
market's
was
in
Jordy
turmoil.
stunting on his reps? How many did we talk about? How many reps he did, or was it just
Well, we haven't leaked
225
that.
We haven't leaked that.
obtusely?
Yeah, you just want to
Okay,
get the story going in the
I
press. Hey,
got it.
hey, the
Got
company's
it.
for sale, probably in the billions. We're not going to tell you exactly how
No,
many
exactly.
billions,
X
but it's
X X
plural.
is a flutter about these reps. They're pining
Yeah,
to know.
yeah.
yeah.
We know you
Um,
respect the Church of Iron. We've seen many photos, so welcome to the show. You fit right in.
wait,
That's right.
you're traveling now? Is that
I
right?
am. Yeah, I'm on the road right now in Oakland, California. Right now,
Oh,
about to head
nice.
over the Oakland Bay Bridge
Very
into
cool.
the
Well, thanks
city
for
Wow,
taking the
of
time to hop
into the
on.
dreams.
belly of the beast.
The belly of the beast.
Uh,
What brings you to San Francisco? Meeting founders,
Meeting
LPs.
founders. We're recording some stuff, and I'm trying to get here more consistently. I live in Utah, and it's just a quick trip. There's enough going on here that I've recently decided it's going to be kind of a weekly adventure out here to San Francisco.
nice.
So I'm going to try to keep that pace up for a bit.
Wait, weekly.
That's a lot.
Weekly.
That's
I did
that's
that for the first 5 years of starting OATV back in
Yeah.
'05. I commuted here once a week for 5 years.
I think if you're going to San Francisco, you shouldn't go weekly. You should go strongly. But
Oh,
I agree with
very
the
good point. That's
general.
a
I
great
agree with
point.
the general
That's a great
idea.
point.
But when you're in SF
Consistently,
doing business, you want to be there strongly, not weekly.
Wait, so weekly. I'm just curious. Not to get too into your personal life, but you just get an apartment and like because you're there so much, or are you a hotel guy or a wander guy?
hotel guy, hotel guy.
Hotel
I
guy.
Hotel
can't
guy.
can't can't do Airbnbs. Can't
Okay.
do can't
Well, you got
don't
to try
want to.
Wander. Wander.com. Code TBPN.
That was an incredible setup.
Yeah, yeah. I mean,
Incredible
We set
setup.
you up.
yeah.
We set you
I,
up.
I think
That
you'll
wasn't
change it too.
even
We'll have you back
coordinated.
on, and
No,
you'll
we
tell
don't
us
do
about
we
your.
don't do we don't do Airbnbs either.
Yeah,
but,
yeah, yeah. But we do go
um,
But
Wanders.
Wander,
Yeah.
No,
I'm
that's
I'm
cool.
gonna have to look into this.
Why don't
What was the code again?
TBPN.
TBPN? It's
Okay.
easy to remember.
Yeah, you can find
I
your happy
guess
place. You can book up Wander with inspiring views, hotel-grade amenities, dreamy beds, top-tier cleaning, and 24/7 concierge service. Basically, Bryce, it's a vacation home, but better. So, yeah, check it
That
out,
sounds
wander.com.
incredible. Would it be
Code
possible to
TBPN.
get one with an 8 sleep
Oh,
in?
absolutely.
we can
Okay,
figure.
that's
Our
fantastic.
people will talk to
figure
your
it out.
people.
We'll
Incredible.
figure it out.
Great.
Anyway, we wanted
No,
to have you on for a real
talk
reason.
about. It feels like Indie is an traditional venture firm, but built for good times and bad times, and scary times and fearful times. And right now, there's been a lot of fear in the market. You came out and
Are you being
had
greedy while others are
yeah.
fearful?
It's possible to be greedy but pragmatic. And
Yeah.
I think that's
What we actually wanted to
that's
talk about.
what-
Advice for entrepreneurs, founders in the midst of market turmoil. Maybe it doesn't affect their business today, but they're seeing bad news, and that's going to put a their customers are going to be worried, their employees are going to be worried, their potential investors are going to be worried. What advice are you giving to founders these days?
Well, like Jordy touched on, I mean, part of our whole thesis is traditional venture, same type of upside, but a different approach to building your business. So, the approach most people take today, they go and raise their seed round, their pre-seed round, their whatever it is, and then the objective of that round is to get to the next and the next and the next. And so you're oftentimes kind of anchoring on what that next fundable milestone might be, and he takes a bit of a different approach. So our companies are kind of the default we set is like, let's have that be the last round you need to raise, and then you can kind of be a lot more offensive as you build your company, so you don't necessarily need anybody else's permission to exist. So with that being the case, I think there's kind of two, I tweeted this out last night. We talked about it a little bit. There's kind of a few approaches to take with an indie company specifically.
Mm-hmm.
You have, in many cases, you have infinite runway. And so you get to operate and you can message in a very different way. So part of what I said is hunker down, conserve cash. I don't think this environment goes away anytime soon. And so I think people need to be preparing for, to be long-term focused. And what that often means is, getting the house in order. Because right now we've been playing the lottery, and it's time to play, and it's time to play chess. I think to me, that's a really important distinction. So much of how we've conditioned entrepreneurs is to kind of play for these lottery tickets. So it's all about fundraisers, get it in the next round. We're trying to kind of work with people to play chess through this because I think the game has fundamentally changed. As you know, I'm been in venture for a long time now. I came in 2001, so immediately after the dot-com crash. So I've kind of lived through the dot-com. I've lived through the financial crisis. We've lived through ZERP. This one, echoes the same, but there's some very fundamentally different dynamics going on here that are going to influence the amount of capital that's available to entrepreneurs over the next few funding cycles.
In some ways, we were talking about this earlier with Logan Bartlett, but one thing I've been maybe paying attention to is the categories that felt overheated: AI, defense tech, robotics. In many ways, like the sort of tariffs would just encourage more investment. And I imagine, we had like Chris Powers on last week, and he's been, banging the reshoring drum. But yeah, I guess do you think that over the next couple months we'll see a pretty big slowdown in investment activity, or just refocusing? Or are you just less interested in predicting investment volume and more so just in whatever the future holds, just run a tight ship?
I think I'm always a fan of running a tight ship. I feel a bit like, it's Groundhog's Day today. I'm waiting for Sequoia to drop their memo. That would be the third time. And it does feel like we learned the lesson and then we kind of go right back to the same behavior that got us in the problem in the first place. Not kind of globally, but I think specifically to the startup ecosystem specifically. We came through ZERP, everybody wanted to get really tight, and then the money started flowing again, and basically kind of people shifted to the current narrative, whether that is defense tech or AI or one of these things. I think what fundamentally changes this time is, you saw last week, Klarna quietly pulled their IPO on Friday. This, what you would call the denominator effect in venture, that name gets thrown around a bit. So I'm happy to explain it if someone hasn't already hit it today. But I think that denominator effect is probably more pronounced than I've ever seen it in my venture career. And that's going to cause the longer term liquidity issues you're talking about, Jordy, in terms of kind of what the funding cycles look like over the next, call it, year or two.
Yeah.
Yeah. Can you unpack the denominator effect a little bit more?
I mean, the denominator effect is basically that traditional institutional LPs have allocated a tremendous amount of money to the venture and private equity asset class. So the top line number isn't the returns that are coming back from those investments don't come anywhere near to the size of allocations they've already made. So another way to frame that is LPs are out way over their skis on venture and private equity, and there's no relief coming in terms of returns. So Klarna pulls their IPO. You've got this kind of regulatory uncertainty. There were a bunch of people cashing Figma checks a few years ago. That never materialized. And so you've got this real issue now that I think is really acute. And I think it's already even starting to show up. Like if you look at that $40 billion OpenAI deal that Masa just did, right? How much of that is actual cash? How much of that is credits? How much of that is debt that he's going to have to go out to find and service? The financial market, the financial picture in startups, I think, is a lot more murky than I've ever seen it before. And so counting on either support from your existing investors or a next round materializing over the next 18 months, if you aren't just absolutely crushing it and putting up insane numbers, like I'm sure most of your audience does. But in that case, unless you're just such an obvious pick, the sidelines are going to be filled with people cheering for you.
Can you talk a little bit about
I was honestly seeing the tariffs, the trade war, and if rates come down, that kind of saving Masa in the sense that pulling together $40 billion by Q1 of next year, which I think is the target. A lot of it's coming from debt. You can obviously secure it against ARM and whatever else he's doing. But still, it's a lot easier if rates drop. There's a trade war happening, and it's where do you put your money if you want to try to generate any type of return that's not But who knows? What were you going to say?
I was going to ask for a little deep dive on some of the buzzwords in the founder world, specifically the difference between boot scaling and indie. You had a post about this, but
I liked Uno Corn.
Yeah. I want to know more about these.
Wild.
There's a lot of phrases out there, and I think that obviously there's a little bit of hype around these. Oh, what does founder mode really mean, or whatever? But they are useful tools, and I'm a big fan of coinages.
I totally agree.
And so
the memetics of it are great.
Yeah.
I would say, you touched on a few. I mean, Jordy jokingly kind of amplified one from this morning. Somebody who sent me an article they were writing that included indie, and they called companies who raise one round of funding with the intent that they're going to get profitable and scale from there as an Uno corn. So, only one round. And so people are getting very creative.
Yeah, Zapier is a good example of the Uno corn, right?
Zapier is a great example of that. Calendly, until they did their growth round, was a great example of that. I think this is a small but growing cohort of companies that are kind of working towards that as an objective, not necessarily to kind of prove a point, more to kind of control their own destiny and to not be so at the whims of these financial markets that are whipping so intensely. And also, kind of putting their customers before their investors' needs. I think this is kind of a growing, what we see as a really growing trend in terms of, there's kind of this massive wave of returning founders who had built through financial crisis or built through ZERP, who've kind of lived through this kind of treadmill of an experience as an entrepreneur, who are looking for a different way to do it. And we hope we can be their partner. But I think you hit on a few of those other terms, right? Of boot scaling. The idea with that one is bootstrap for a little bit and then raise money to scale later on. So kind of merging those two ideas. The other one I think was seed strapping, right? So again, that idea of
a lot of portmanteaus. A lot of portmanteaus. On that.
Look, hey, I no judgment, but tech hasn't exactly killed it on the marketing front of late with maybe some of the stuff. But the idea with seed scale is like raise one round and then scale it, as much as you want. On the back of, I think the tweet you mentioned was like, I basically was framing those two really as like fundraising tactics. That's still fundraising is still core to that idea. And I think with indie, what we like to embody is this idea of independence, of this idea of kind of controlling your own destiny, of building things that don't have to ask permission to exist. And I think as we get to, this kind of inflection point in tech, whether it's in the financial markets or in this kind of new and evolving technologies coming, we want lots of possible futures. We don't just want the one that's blessed by A16Z. We don't just want the one that's blessed by Sequoia. We want futures that could be possible with or without their participation or with their blessing. So I think the world gets a lot less interesting once you start having to ask for permission to exist.
Yeah.
Are you bullish on the app layer? I imagine if you want to scale efficiently right now and build an AI, you're not getting into the foundation model business. SSI is technically a Uno corn. One round.
That's right.
Yeah,
exactly.
Most of the foundation model companies actually
they
went straight to unicorn. One round. Yeah,
one round. That's it.
They didn't have to raise a ton of rounds to get to $1 billion valuation.
Yeah, but
that's the goal.
You're
incredible.
You're going to be an SF. You're going to be an SF later. What are you looking for?
That feels like the place to build an indie company is in the wrapper layer that's overlooked by VCs. Maybe it's not a power law company, but you can build a fantastic business just delivering amazing stuff. I'm super bullish on it, but I want to know what you think.
No, super bullish on it too. In fact, I think you have Rahul coming on after me, and we've had this kind of ongoing multi-month, multi-year conversation going around kind of high status and low status startups.
Yeah.
And the kind of high status have to raise a ton of money, or at least look like you have to kind of position like you're really, really innovating. I think those are they're such a head fake here in the Bay Area specifically, because the kind of social strata is so funny. I think, John, you hit on it. Like, I think that app layer is where so many incredible breakout indie companies can be built, because you're now talking about, swapping out any of those models, and you get a benefit from all those improvements and just focus on a customer and their needs and the opportunity of a market. I think it's a huge opportunity that doesn't feel at all like you have the same kind of network effect lock-ins that you had with like Facebook back in the day, or when Twitter turned off your API access. I think
Yeah.
so many of these models are like hyper competitive in terms of what their performance and output actually looks like, that you can build incredible experiences off of those that can swap pretty easily between them. It's,
Yeah.
I would think of them more like moving from, Google Cloud to AWS, right?
Yeah.
That feels like more the analogy than like the dependency of Facebook and their platform.
Yeah. Yeah. That makes a ton of sense. You got a last question, or we're good?
No, this was great.
Yeah, this is
I want to
fantastic.
ask you how you're, offline, how you're trading the tariffs in terms of like, Japanese fashion and
Yes, yes.
sort of collectibles, which I'm sure you're making.
I knew the fit check was coming at some
The
point.
fit check. Fit check.
This is great. This is great.
Always a pleasure, Bryce.
Always a
have
pleasure.
Fun. Have fun over across the bay.
Yeah,
and,
enjoy it.
Looking forward to the next one.
Yeah, we'll
Thanks,
have you
guys.
back on soon. Thanks so much.
Okay.
Cheers.
This is great.
Appreciate it.
Talk to
Take
you
care,
soon.
guys.
Bye.